Ladies and gentlemen, Asian guy here, and what I'm about to show you is the most explosive precious metals story that nobody is talking about. While everyone is celebrating silver's rocket ship past $91, they're missing the real earthquake happening underneath. The gold to silver ratio is collapsing so fast, it's making history. We're witnessing the most violent compression toward the legendary 7-to-1 ratio in over 150 years. Right now, as I'm recording this, the ratio has crashed from 85-to-1 just 6 months ago to under 23-to-1 today. That's not a correction. That's not a trend. That's a complete monetary reset happening in real time. And if this compression continues at the current pace, we're looking at 7-to-1 within the next 90 days. Let me explain why this matters and why it could make you generational wealth or cause you to miss the greatest precious metals opportunity of your lifetime. The 7-to-1 gold to silver ratio isn't just a number. It's nature's ratio. It's the geological ratio of silver to gold in the Earth's crust. For thousands of years, this ratio represented fair value between the two monetary metals. When Roman emperors minted coins, they used approximately 7 ounces of silver to equal 1 ounce of gold. When the Founding Fathers created America's first currency system, they established silver and gold at roughly 15-to-1, close to the natural ratio. But here's what happened in the modern era. Central banks and governments systematically suppressed silver while hoarding gold. They convinced the world that gold was money and silver was just an industrial commodity. The ratio exploded from the natural 7-to-1 to as high as 125-to-1 during the 2020 panic. That manipulation created the greatest arbitrage opportunity in monetary history. Now that manipulation is unwinding violently. Silver isn't just catching up to gold, it's preparing to overshoot dramatically on the other side. The math is absolutely staggering. If gold stays at current levels, around $2,750, and the ratio compresses to 7-to-1, silver hits $393 per ounce. If gold rises to $3,000 during this monetary crisis, silver hits $429. If we overshoot to 5-to-1, like we did briefly in 1979-1980, we're looking at silver over $500. But here's why I believe we're headed to 7-to-1 faster than anyone expects. The physical supply crisis that's driving silver to $91 is accelerating, not slowing down. The US Mint just paused multiple silver products because they can't price them fast enough. Costco is limiting silver purchases because they can't keep inventory. Futures margins are scaling higher, yet silver keeps climbing. The East-West price split is widening as Asian buyers pay massive premiums for immediate metal. These aren't signs of a normal bull market. These are signs of system breakdown. Meanwhile, gold is sitting relatively stable around $2,750. It's not crashing, but it's not exploding either. This creates the perfect conditions for ratio compression. Silver is doing all the heavy lifting, while gold provides the stable benchmark. But here's what makes this move towards 7-to-1 inevitable: the industrial demand crisis that's about to hit. Every electric vehicle needs 2-3 ounces of silver. Every solar panel needs half an ounce. Every 5G tower needs 15 ounces. The green energy transition alone requires 200 million ounces annually by 2030. But here's the kicker. Annual mining production is only 830 million ounces total, and it's declining due to ore grade degradation. Meanwhile, investment demand is exploding. Retail buyers are panic buying silver coins and bars. Institutions are finally waking up to the supply crisis. Even central banks, which historically ignored silver, are starting to accumulate. The supply-demand imbalance is so severe that we're looking at a structural deficit of 250 million ounces annually for the foreseeable future. That deficit has to be filled from above-ground stocks, which are disappearing rapidly. Now, let's talk about what happens when the ratio hits 7-to-1. History shows us that extreme ratio compressions don't stop at fair value. They overshoot dramatically. In 1979-1980, the Hunt brothers' silver accumulation drove the ratio briefly below 5-to-1. Silver hit $50 when gold was around $200, creating a 4-to-1 ratio for a few weeks. The overshoot was so extreme, it triggered a government intervention and market manipulation that lasted 40 years. Today's setup is far more powerful than the Hunt brothers' situation. This isn't two billionaire brothers accumulating silver. This is a global industrial panic combined with monetary system breakdown. The entire world is simultaneously realizing they need silver for technology and monetary security. China is hoarding silver for their electronics manufacturing. India is importing record amounts for jewelry and investment. The US military is stockpiling silver for defense applications. Tesla alone needs 50 million ounces annually for their battery production. All of this demand is chasing the same finite supply, creating a bidding war that's just getting started. The currency crisis is adding rocket fuel to this move. The dollar is losing purchasing power through money printing. The euro is collapsing due to energy costs and debt problems. The yen is being debased to maintain competitiveness. Investors worldwide are fleeing paper currencies for real assets. Gold has already absorbed massive monetary flows, pushing it from $1,200 to $2,750 over the past few years. But silver remained artificially suppressed until recently. Now silver is catching up all at once, creating the violent ratio compression we're witnessing. But here's what most people don't understand about ratio trades. When the silver-gold ratio compresses this rapidly, it creates a feedback loop. Silver's outperformance attracts more buyers, which drives the ratio lower, which attracts even more buyers. Professional traders who have been long gold and short silver for years are being forced to cover their positions. They have to buy silver and sell gold, accelerating the ratio compression. Hedge funds that miss the silver move are chasing performance, adding to the buying pressure. The technical setup is absolutely perfect for continued acceleration toward 7-to-1. Silver has broken through 40 years of resistance levels. The weekly chart shows a massive cup and handle formation with a measured target of $150. The monthly momentum indicators are reaching levels not seen since the 1970s. Meanwhile, gold is showing signs of exhaustion. It's struggling to break new highs despite continued monetary stimulus. Smart money is rotating from gold into silver to capture the ratio compression opportunity. The options market is pricing in extreme volatility for silver, while gold options remain relatively calm. This suggests sophisticated investors expect silver to continue dramatically outperforming gold in the coming months. But here's the most important point. Physical availability is becoming the determining factor, not paper price discovery. Silver dealers are reporting 6 to 8 week delays for delivery. Premiums over spot price are reaching $8 to $10 per ounce. Some products are simply unavailable at any price. The Shanghai premium over London spot has exploded to over $15 per ounce. This physical tightness doesn't exist in gold. You can still buy gold with minimal premiums and reasonable delivery times. The contrast is stark and telling. When physical becomes unobtainable, paper prices become irrelevant. People will pay whatever it takes to secure actual metal. This is how silver could gap from $91 to $150 or higher without warning. The smart money is positioning for this gap move. Billionaire investors are quietly accumulating massive silver positions. Mining companies are refusing to sell forward production, gambling on much higher prices. Even some central banks are reportedly accumulating silver for the first time in decades. The setup for 7-to-1 is mathematical at this point. Silver needs to rise 170% from current levels, while gold stays flat. Given the supply crisis in silver and relative abundance in gold, this isn't just possible, it's probable. But the timeline is accelerating. What I thought would take 12-18 months might happen in 90 days based on the current compression rate. The physical shortage is creating urgency that paper markets can't ignore. Here's what to watch for as we approach 7-to-1. Increased mainstream media attention as silver passes $100, $125, $150. Government intervention attempts as silver threatens monetary stability. Mining company stock explosions as investors chase leverage to the metal price. Exchange trading halts and margin increases as volatility spikes. The most important thing to understand is that 7-to-1 isn't the end. It's potentially just the beginning of an overshoot that could take silver to levels that seem impossible today. If you're positioned in physical silver, congratulations. You're holding the winning lottery ticket. If you're not positioned, every day you wait becomes more expensive as supply disappears and prices gap higher. The collapse toward 7-to-1 is happening now. The only question is whether you'll participate in the greatest precious metals opportunity of our lifetime or watch from the sidelines as history unfolds. The collapse toward 7-to-1 is happening now, but there's another layer that could accelerate the move faster than predicted. Silver futures are trading at massive backwardation, immediate delivery commands premiums over future delivery. This signals severe physical shortage. When futures trade below spot prices, paper markets lose control of price discovery. Options activity has exploded to unprecedented levels. January 2025. $100 calls show massive volume as traders position for gap moves. Even $150 and $200 calls see unexpected activity, suggesting smart money believes we're headed much higher. Silver mining stocks are pricing in 200-plus silver reality. First Majestic and Pan American silver stocks have multiplied as investors realize leverage potential. If silver hits $200, these companies see 10x earnings increases due to fixed costs. The geopolitical dimension adds urgency. Countries realize silver is strategic for military technology, renewables, and industry. Russia quietly accumulates through state enterprises. China's imports hit records. Switzerland reportedly adds silver to strategic reserves. This government accumulation removes massive quantities permanently. Unlike investment demand, which reverses, strategic buying shrinks available supply forever. Banking sector wakes up to silver's monetary properties. JP Morgan holds over 150 million ounces, the largest private stockpile in history. Goldman upgraded targets to $35, now laughably conservative. Bank of America calls silver trade of the decade. Technology sector demand becomes desperate. Apple, Tesla, Samsung secure long-term contracts at any price, fearing production shutdowns. Solar manufacturers are most desperate. Green transition cannot happen without massive silver consumption. Some stockpile 2 years' inventory, unprecedented for just-in-time industries. The timeline for 7-to-1 keeps accelerating as forces compound. What started as technical compression becomes fundamental supply crisis pushing silver beyond current targets. This is Asian Guy, and the ratio compression has only just begun. The next 90 days separate winners from spectators. Position accordingly.